Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab. This is Advanced Charting Techniques, and today we have a little bit of a special discussion. This is a viewer request. I was assisting with another webcast, and somebody chatted in and said, "Hey, Cameron, could you possibly talk about the Woody's CCI in an upcoming webcast?" And I thought, that's not a bad idea. Actually, CCI, one of the most popular indicators out there. Woody's CCI, a play on that same theme, but not nearly as commonly found, at least in my experience, on the traders' charts. So we're going to be talking about Woody's CCI. I'm going to explain how it's built, how it might be used. We're going to be placing an example trade using that new indicator. But before we can get to any of that, let me first of all say hello to everybody out there chatting in. Great to see Scott and Chris B, Janelle, Bob, Randy, Will, Ocean Life, Selva, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series, and this one kicks off promptly at 1 Eastern time. We'd love to have you here in the live stream audience. I also want to let everybody know that my very good friend Barb Armstrong's hanging out in the chats with us. Barb's going to be addressing any questions that I can't get to, posted by the live stream attendees. As long as they're on topic, if I can't get to those, Barb's there to pick up the slack. Thanks for being there, Barb. And also, Barb and I would like to issue an invitation to everybody watching, whether you're watching on the archive or you're here in the live stream. If you're not doing this, follow Barb and me on X. You can find us there on X at Barb Armstrong CS or at Cameron May CS, but it's the best place to connect with your favorite presenters in between the live streams, and everybody here knows what a great job Barb does on X. So much good information. Great post there. So let's get into this. And as I do, let me throw it out there. A quick question. How many of you are familiar with the Woody's CCI? I wouldn't be surprised if I got a whole bunch of no's and not a single yes out there. That wouldn't be a surprise to me at all, but we'll see. Anyway, but let's get into this. Of course, we need to bear in mind the risks associated with trading and investing. These disclosures are important, so keep them top of mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. All investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. Okay, so with all that said, let's set the agenda for the day. I do want to take a quick peek at what the markets are doing. We're going to frame it within the context of the TVM method that we've been employing, the trend, value, and momentum charting technique. We're going to see what's going on with that. But then we're going to dedicate really the bulk of our time to discussing the Woody's CCI. How is it built? How is it related to the traditional CCI? And how might it be used to plan and place a stock trade? So let's get into this. Hey, it looks like in response to my question, I got a couple of yeses. Interesting, but a lot of you saying, not here, never heard of it, no, never heard of it, nope, no sir, not familiar, nope, nope, first time hearing, nope, nope, no, no, nope, nope. Now, does the fact that something is comparatively less commonly used mean that it's less valuable? I want to address that right up front. No, nor is the popularity of an indicator a guarantee of performance. For each indicator a trader once introduced to it should really run it through a series of tests for themselves to see if it's going to be used for their own personal portfolio, if there's any intention of using technical analysis at all. But let's go right to Thinkorswim, and I want to have a look at what's going on with the S&P 500. And what I had noticed recently, I actually planned to make a post about this, didn't quite get it done, but what I noted was that we had this recent kind of scary pullback starting right there in the first week of December of last year, terminating, at least recently, the second week of January. Pretty good pullback here, but then a very sharp recovery. Now, this is not the first time we've seen this in the last 12 months. We had a pretty steep pullback right here and a very sharp recovery. We had a pretty steep pullback right here and a very sharp recovery. And after that, what we saw in each event was a little bit of hesitation from the markets and then a strong advance. Here's a little bit of hesitation again for the markets and a strong advance, actually coming all the way up to here. So this is really about the third time in the last 12 months that we've seen behavior from the S&P 500 similar to this. So where do we think from here? Could we see another advance similar to this one or to this one? Time will tell. Let's see what our technical indicators say. I'm going to come up here to our studies. Let's load our study set that is our TVM strategy set. So this is a pair of triangular moving averages, RSI and MACD. We're referring to this as the trend, value, and momentum study set. So let's see what's going on with the trend of the S&P. Well, for some technical traders, when their moving average, in this case it's our 50-period triangular moving average, is still above our longer-term 100-period triangular moving average, they may see that as a confirmation the trend still has strength. Well, within that trend, there can be periods of comparative overvalued scenarios, periods of comparatively undervalued scenarios, and pretty recently, a couple of weeks ago, we caught on to this. We had dipped down into the oversold area for our RSI, down in that lower reversal zone, basically down below 40. And that coincided with a nice touch off that 100-period triangular moving average. And also at that time, our MACD histogram was turning from a bright red to a dark red, which for some may signal that the momentum is moving from bearishness possibly back to bullishness. So trend strong, value apparent, seems to be there, and momentum seemed to be shifting back to the bulls, and prices persisted higher from there. We'll see. We're starting to get maybe a little bit top heavy here, up closer to the 70 on our RSI. Our MACD starting to sag a little bit here. See where we head from here. Kevin says, is there a potential cup and handle? That's another way that we might have described these patterns, right, Kevin? Cup and handle, cup and handle, cup and handle. Yep, good call out there, Kevin. So we'll see where the markets head from here. But through this one technical lens, it seems to be bullish, and we're moving right up toward. Let's just clean things up again. Let's come back up here, take off our indicators. And we're in position to maybe, we still have 3 hours of trading left, just a little bit of additional strength on the S&P 500. We could be looking at the all-time high close. The highest we've ever closed is 61.18 and change. We're at 61.13 and change. So 5 points on a 6,000 point index. That's a little tiny move. All right, so now let's get talking about this requested indicator, the Woody's CCI. And I'm going to tell you, it's a somewhat complicated indicator. I am not going to go there. It has lots of attached bells and whistles, lots of different ways that it might be traded. I'm going to try to keep it as straightforward as possible in this discussion. But really, it all stems from an indicator that a lot of us are familiar with, especially, well, not especially due to this fact, but I did cover this indicator just a few weeks ago. The Woody's CCI, as the name might imply, is built on a traditional CCI. So just a quick recap of that traditional CCI. And for our first chart symbol here, I'm just going to use Amazon as our example. Let's apply CCI to our charts, just a traditional CCI. So I'm going to click on our little Edit Studies icon. Let's enter CCI as a search term here in our menu to narrow that menu of available CCIs. Notice right down there is our Woody's. We'll get back to that one. But let's talk about the traditional CCI. I'm going to add that to our chart, click Apply, and click OK. Now, let me do this. For the benefit of those that aren't terribly familiar with the CCI, I did recently, I can't remember if it was just a few weeks ago, maybe a little bit longer than that. Let me paste in the chat. There's a link to my recent webcast that I titled How to Trade Stocks Using Commodity Channel Index, CCI. Okay? So if you need to see this in greater detail, a little bit more detail than what the treatment that I'm going to provide to it in just these next few minutes, you can go watch that webcast. Or if you're watching after the fact, let me show those that are watching on the YouTube archive. What you can do is go to our Trader Talks channel on YouTube. And while you're there, make sure that you subscribe. But then you can just do a search. Let's type in CCI. Let me get my cursor out of the way so you can see this. So I just type in CCI in the search box on our homepage for Trader Talks Schwab Coaching Webcast. Hit enter, and there you go. How to trade stocks using the Commodity Channel Index, CCI. So when did I do this? Oh, that was 5 months ago. I thought it was a few weeks ago. That's okay. Still serves the same purpose, but let's do a quick recap on our CCI. So what you'll notice is that it consists, hey, Greg, you're welcome. Yeah, you're welcome for that link. It consists of 4 lines. We have 3 red lines and 1 black oscillating line. So the black oscillating line is the CCI line. And really, it's basically intended to represent recently what's referred to as the typical price of a stock. And a typical price is actually just taking recent high, low, and close values and adding them up and dividing by 3. And we just do that for 14 days. And then we just observe the changes from day to day over the last 14 days in that typical price. It's sort of an average price on a stock chart. So that's going to fluctuate up and down. But then we also benchmark that against a set reference point. And for the Thinkorswim CCI default, let me pop back up here for just a moment. You'll notice the number 14 here. Actually, I didn't even need to do that. It's right over here. The number 14 is telling us that we're looking back over the last 14 days, and we're calculating a moving average, and we're just comparing what's happening with our typical price recently versus that moving average. Are we higher or lower than that average? That average functions, it's displayed on our chart actually just as a 0 line. So when our CCI is above 0, it means that the recent typical price is above the moving average. When we sag below, the recent typical price is below that moving average, and we're looking for extreme departures. That brings into the discussion the other 2 red lines. We have our plus 100 and our minus 100, and most of the time we trade, you'll see our RSI value line, the black line, is between the upper and the lower. Dave, what can't you see? Are you missing the link that I posted in the chat? Might look right up above. If you can't see it, make sure at the very top of your chat window, instead of saying top chat or top chat, that's changed to live chat. All right, but yeah, a lot of the time, our black oscillating line is between the 100 and the minus 100, and that's just considered to not be terribly interesting to our traders. Typically, that use this CCI indicator. What they're looking for is when the typical price gets way above or way below the average price, pushing toward extremes. Way above and way below defined here as being either above 100 or below 100. So if we slip down below 100 and start to strengthen, that may actually be an entry signal. If we slip down below 100 as we did here or as we did here, that may be a signal that price has gotten to extremes on the low end, and maybe it's set to rise. So this is known as the Commodity Channel Index. It's used to generate signals like that, but also it can be potentially used to identify trends. Let me just remove this one drawing. There we go, just to clean this up. Oh, crispy, yeah, that happens sometimes. I thank you for clarifying. I see what you were talking about now, Dave, but it looks like our producers have fixed that issue, so thank you guys in the background. But let's go to a longer-term chart and talk about how this CCI channel is sometimes used to confirm trend. And you might say, Cameron, why are we talking about CCI when I thought we were going to be talking about Woody's CCI? Well, a lot of these same functions are preserved within the Woody's CCI. They can still be done using Woody's. It's just that Woody's brings into the realm of possibility lots of other potential trade scenarios. But yeah, entering at or below 100 as we rise back up above 100 is a possible entry, typically only done if the trader has first confirmed that there is a bullish trend to the stock in the first place. So how might we confirm that trend? Well, that might be done from a longer term chart. Let's switch up Amazon. Let's switch to a 3-year weekly. And on this chart, where the trader's eyes might go is to look to see recently, has the indicator been spending more time above the zero line or below the zero line? And if our indicator, if our CCI oscillator has spent most of its time on a weekly chart above zero, that can be an indication that the price trend has been strong and strengthening. And during those time frames, on a weekly chart, when we're spending most of our time above zero, that might be a period when the trader is looking to plan bullish trades. If we're spending most of our time below zero, as we did much of this period, maybe the trader is planning primarily bearish trades. So yeah, Amazon still looks like it's been primarily bullish. So if we were to switch back to a weekly chart, we might be building bullish trends or bullish trades. So all of that is a backdrop for the Woody's CCI. There's one among some of the shortcomings of the CCI, or it's not a shortcoming, but we discussed it in the link that I provided, is the fact that there can be a lot of what we call whipsaw events with a traditional CCI where we get below 100, we pop back up above. Here's a good example right here. Actually, a pair of good examples right there. And then there was another one immediately following where the CCI dropped below 100, attempted to rally. That would be a signal to our bullish traders, hey, looks like it's about time to get in. And then the stock kind of waffled around and failed. So for some traders, they may actually prefer to see more extreme moves before getting into these bullish trends. And one potential example extreme is to look for CCI not to get just below 100, but all the way down below 200. And in our discussion last week, I drew in lines at not last week, but in that link that I provided, I drew in lines at 200, where I also just customized the indicator to expand the 100 and the minus 100 up to plus 200 and down to minus 200. I'm not going to do that again. You can see how that's done in the link that was provided or by going to the webcast on YouTube. But Woody's, this is one of the very first things that the Woody's CCI attempts to address. So Dragon Rider says, what percent of traders are using this method? I have no idea. Nope, no clue whatsoever, because it could change from week to week. Yep. I don't think that most traders are in the habit of stating publicly what they typically do, unless they're trying to sell something. Let me clear up this drawing set, but it's a good question. I definitely understand the motivation for that question. But let's add our Woody's CCI now. I'm going to go up to Edit Studies, type in CCI, and as I apply Woody's CCI, you're going to immediately see some similarities here. Now, there are definitely going to be differences. Notice the number 6 is getting introduced here on the Woody's, where it's not there on the 14. Let me click Apply. Let me click OK. What do you notice right away? Well, we have horizontal lines on the CCI. We have horizontal lines down here on Woody's. But there are more on Woody's. We have an oscillating line on CCI. We have an identical oscillating line on Woody's CCI. It is really exactly the same. This purple line is exactly the same. But there's actually a second line. Let me zoom in here. Did I? No, I know what's happened here. It's like the second line is missing. No, there's actually a second line moving back and forth over this purple line. I swear there is. The problem is, by default, it's actually a yellow line, and when we're using the white backdrop, it can definitely disappear. Notice there's an attempt to make a number in yellow there that nobody can see right now, so the contrast isn't sharp enough for me for you to see this other line, and that's why I thought for a second, where'd my ghost line go there? But yeah, there are horizontal lines. There's our familiar oscillating CCI line. It's referred to with this indicator as TCCI, which is just be a traditional CCI. But there's a second line. I need to make that other line visible. So let's go up and make some customizations here. And by the way, now that you can see the similarities between the CCI and the Woody's CCI, let's quickly state one more thing, and then I'm going to take the CCI off. Yeah, Chris, you need your secret decoder pen to see it. If you've been drinking your Ovaltine and saving up your points, so you can order it. But let's pop up here and let's customize this Woody's CCI. I need to change the color of the CCI. No, it's not the one. There it is. Let's make that maybe a blue. Let's make it a little bit different color than our, how about green? And let's make it a little bit thicker. There we go. Click OK, click apply. See, I told you there was another line. It was just yellow. All right, but what are these other lines? Well, the first three lines, we have a red and green line here. It's just the 0 line. We have this blue line here. That's just the 100 and minus 100. What do you suppose this final sort of red and green and yellow line is up here and down here? That's plus 200 and minus 200. So it has that customization of those greater extremes already built in. So this was built by a gentleman named Ken Woods, and he thought, hey, let's watch for those more extreme extremes. So that's been built into the indicator. So I'm going to remove now our traditional CCI. So if I come up here, click the X, let's apply, get rid of that one. But let's also look at sort of the inner workings of our Woody's CCI. I'm going to click on the little gear icon, and you'll see a row of tabs here. So we have the CCI, also known as the traditional CCI, or the CCI, sorry, I got a little bit ahead of myself, is our purple line. We're familiar with that. The TCCI is sort of a trend CCI. It's a smoothed version. If you're wondering what that green line is, it is a 6-day moving average of our 14-period CCI. So that's what that is. But we also include a histogram. Those are the colored bars that are above and below our 0 line. Then we have plus 100, minus 100. Notice the CZ here. That doesn't stand for cubic zirconium. That is instead the what does he call it? He calls it I have to remind myself here. Oh yeah, he calls it the chop zone. It's great title. The chop zone is what Ken Woods refers to as the area between plus 100 and minus 100. So if we're above 0, but we haven't really gone above 100, or if we're below 0, we haven't really gone below 100, that's sort of the normal range. It's the chop zone. It just means the stock price is chopping around, not in a terribly meaningful way. So we have CZ plus 100, CZ minus 100. Now, if we get above that level, I have not been able to decipher this language here. It's never made sense to me, but it refers to the 100 and the plus 200 and the minus 200 as the Sidewinder zone. That's not what I would have called it, but that's what he calls it. Finally, we have the 0 line. Right? So if you want to, you can click through here. What you'll notice is for each one of these, there are a series of colors associated with them. Flat, normal, trending, and so on. I'm not going to get into all of these colors, especially in the chop zone. But let's just apply that all to the chart, just so we now really understand what we're looking at. We have a couple of oscillators. We have a histogram. Basically stated, the histogram doesn't really add anything more to the equation than it's a different way to draw in our CCI line. You'll notice that the CCI and the histogram just move right in step with one another. Okay, so it's a nice way to make it more colorful, I guess. But let's talk about the additional signals that might have been added and how a trader might trade this. It's a little bit different than our traditional CCI. First thing that we might do is just look for those strong departures from the normal. So the zero line represents, basically our 14-period moving average. Sometimes a trader will adapt this to a 20-period moving average, because that is actually the way the traditional CCI was built. The typical time frame is 20. Our default here is 14. I'm going to leave it on 14 for this discussion. So for example, here's Amazon, and you'll see it took a steep drop in price, and that was enough to push the histogram or the CCI, the purple line, both same thing. But they both got down below minus 200 here. And when a trader who is looking for bullish entries, who's motivated to find extreme departures from the norm, when they see that happen, that may be a signal for potential entry. So that would be right here. And the specific entry might be the moment either the histogram or the CCI line starts to turn back up. And that looks like that gave a signal right there. The lowest point of the year happened to be, I think, the only 200 departure signal for the entire year on Amazon, and that one turned out to be pretty good. It doesn't always turn out to be pretty good. Sometimes these extreme moves can actually kick off extended moves to the downside, so there is that risk. So that's one potential signal. A second potential signal that would be a departure from a typical CCI trade is to look for crossovers of, let me zoom in, see if I can find one here. Yep, there we go. When we see our green moving average line, this is a moving average, again, of our CCI line. It's a 6-day moving average of our CCI line. When it gets down below our purple CCI line and then crosses back up above, and that looks like we got that crossover right here. Can you see that? Green crossing up over purple. That may be a signal. Think about what this means here. Our typical price still going down, but the average of that typical price is it's actually slowed down enough that it's starting to cross back up above. That may be a sign that that price is ready to make a move. And so how long might that last? We never know. But a trader who takes this as a signal to enter may take the opposite of that signal to exit. So that might be a crossover right here, which might have been signaling to exit right there. So that's a second thing that can be introduced by these oscillators. Now, the third potential signal is actually going to tie back. This is, okay, I just figured out why I was thinking that I had my discussion about the CCI just in the last few weeks. There's actually another very familiar type of technical indicator embedded within the Woody's CCI that we did just discuss in the last few weeks. How many of you were here a couple of weeks ago? I think it was 2 weeks ago when we talked about the TTM squeeze. Chris B says that moving average looks weird, doesn't it? Is it a hull? I don't believe so, Chris. Let's go up here and just have a double check. Let's see if that's, I don't think so. I don't think so. I'm going to have to investigate that. I don't think so, Chris. You might be right, but in any case, it would be a fairly nominal difference. Dave, you're saying it is? All right. In any case, there is a third kind of embedded indicator within the Woody's CCI that ties right back to our TTM squeeze. And with the TTM squeeze on Thinkorswim, we talked about how it generates these little dots down the middle that might define for the trader whether there's been a significant squeeze or not. Oh, Chris, you said it seems to be leading. That's why you asked. Yeah, I'll have to investigate that. I don't think so. Anyway, Scott, you like that discussion of the TTM squeeze from a few weeks ago? Yep. Well, if we look at the dashes that are going down our zero line, there aren't dashes on a traditional CCI, but on the Woody's CCI, there are dashes, and it has to do with the histograms or the CCI. But let me zoom in here. But basically, when the histogram is strengthening, and it's above the plus 100, or it recently transitioned from being below 100 to above 0, we're going to see green dashes on our chart, indicating potentially we're seeing strengthening of that that typical price. I mean, basically, it's just saying either the typical price has just crossed above its average, or it's really outstripping the average. There's a strengthening of that momentum of the typical price. Whether you follow that logic or not, when we transition from a series of red dashes, and especially just like with our TTM squeeze, typically we want to see probably at least 4 or 5 of these dashes. If we have 4 or 5 red dashes, signaling that we've been collapsing on our typical price, our CCI line, but then we transition to green, that may actually be an entry signal. So let's just go back over the history. Let's zoom back here on Amazon a bit. This one's a kind of a weak signal. This was only one red dash. Let's see where a different signal came in. Here we go. Here are a series of red dashes. Are you following which red dashes I'm talking about? The ones in the middle on this line right here. So we have a series of red dashes. And then just like with a TTM squeeze, when we transition to green, that may be a signal to the trader that price is strengthening again. It's breaking out of a bit of a trading range, and it's ready to move in a new direction. And we just follow that until we get a series of red dashes. Yep. And it looks like, and for some traders, they may get out just on the appearance of a first red dash. That might have been right here. Or they might wait for a series of red dashes. In any case, red dashes, just as the color scheming might imply, might mean that price is ready to go down for a bit. And we just follow our eyes along with those red dashes when we transition from red. Let's see, where do we get to green? There's green. Notice this one was just a hiccup, just a couple of greens. We might have sidestepped this move down if we're waiting for 3 or 4 or 5 greens. Let's keep going. Red, red, red. 1, 2, 3, 4, 5 greens. Trader might be ready to get bullish again. So some traders take the trade, much like the TTM squeeze. If there's at least a series of 4 or 5 red, on the appearance of the first green, they take the trade. If they did right here, this one would have been a whipsaw. It would have signaled to get in right here, and that actually happened to be right before this strong move down on Amazon. What was that, an earnings announcement maybe back there in August? But we had another series of reds. If we took an early signal there, it might have been a signal to enter right here. Christian says, 5 red dots on the daily. Is that your signal, Christian? Are you among those that are familiar with this indicator? Okay. All right, so there's our indicator. Now, I know there are going to be those of you out there. Let me just sort of zoom forward and say, look at this mess we have right here. We have 5 lines. We have the moving back and forth of 2 oscillators, the red one, the green one, and the purple one. We have histograms changing colors. We have the dashed lines changing colors, green to red to yellow, green to red to yellow, just like you might suspect when it's out here at the sidewinder line. That's typically interpreted as positive, neutral, positive, negative, neutral. That's what that means. The histogram, if you really want to know, typical definition of the colors here, gray is neutral. Yellow just marks the last neutral gray histogram bar. So it's sort of a transition from neutral to not neutral, which could be yellow or red. Or pardon me, yellow or red. Red or green. So here we're going from yellow to red, which is from neutral to negative. Here we're going from neutral to not neutral because we're going to green. So that's what that means. That's a lot. And then what are the rest of these colors? It's a mess, guys. I don't want to talk about, I could provide lots of different potential trading scenarios, but I think you may have already noticed we've covered quite a few already. So I thought maybe let's not complicate this further and just stick with what some might consider to be the more traditional, maybe potentially the stronger signals. And using this indicator, much like the TTM squeeze, I think that there are a number of traders who would say that a transition from 4 or 5 red dashes to a green dash represents potentially the strongest signal from this indicator, with the possible exception of a dip below 200. So let's see if we can find something. I think I had one. I think Google. Let's go have a look at Google. I think Google had a recent move to green. Let's zoom in here. And by the way, there's a little number up here that just tells us, according to this definition, whether this stock is quote unquote trending or not. When this is green, it's just a suggestion that we have recent green dashes. You can have that on if you want to. If that's sort of cluttering up your chart further, you can go up here and click on the little gear icon, and where it says hide the sidewinder, which is that. Let's change that to yes. Click OK, click apply, click OK. What that does is it just gets rid of that number, and now the whole indicator is less compressed because you have to squish it down in order to provide the headroom space to have that sidewinder number. All right, so here's Google. Ooh, it's kind of a weak signal. Just 3 reds. For some traders, that might be adequate, might not be adequate. Let's go to our watch list and see if we can find something maybe a little bit stronger. I might go ahead with Google if we can't find something else. Oh, actually, there's Broadcom recovering pretty sharply from that DeepSeek sell-off. Let me zoom in here. 1, 2, 3, 4. 4 days with a red dash, and that is a green. Notice the histogram still red. Our oscillator still below 0, but we did get a green here. So let's do, how about we take an AVGO trade? All right, so let's go to our trade tab and plan an entry. Now I already have in a different series a position on Broadcom. Is it in this? Let me maybe direct this. Let's see. Yep, it's in here. That'll be okay. All right, that's for my other webcast series. But if we're buying right now, when might the trader get out of a trade? Where might they take profits? Where might they take losses? Well, when using this sort of scenario where we're getting in because we have a green dash, the trader may just monitor their dashes and get back out on the appearance of a red. That might be tomorrow. It might be a very quick trade. It may be, we can get a stretch of moves where it might last for a couple of weeks. But just be prepared. This is a fairly quick turnaround sort of a trade. Now, that's one way to manage the profit-taking scenarios on a trade. Another way is to use your chart and maybe just look for recent resistance levels. So maybe we're targeting 247 following this entry, as an example. When might we take losses? Well, if a trader is using stops, they may use a recent support level. And in this case, it looks like if AVGO were even to fall back down below today's high, or pardon me, below today's low, that may be breaking through a recent support. So how about we take this entry, and since I'm not going to be able to watch for those green dashes and then gather everybody together again so you can watch me sell on the appearance of a red dash, let's set our target up there at 247 and our stop just below 220. Let's maybe set it down at 218. Okay, so let's go to our trade tab. Let's right click on the ask price here, put in an order to buy, but with a custom OCO bracket attached. Barbara's saying, can you address the green and red shade? Barbara, those are drawings that I made for a different webcast series that are related to a different trade. So it's not something that automatically appeared on my chart. I drew it in manually. So it's just a description of another trade. It's not related to this discussion. Okay. But how many shares do we want? relatively more expensive stock. 10 shares would be $2,200. Let's do 20 shares. And let's link those orders together by clicking on the little broken chain link. For this order, I'm going to enter this as a market order. So that just means we're willing to pay whatever it takes to get into the stock. But we're going to place our stop up there. Where do we say that was? 247? I believe that's right, if memory serves correctly. I'm going to make that a good till canceled order. And then our stop was going to be down at 218, just below 220. And we'll make that good till canceled. And there's our trade. So let's click confirm and send. Going to buy 20 shares of Broadcom at the market price. Just have to remember with market orders, prices can change quickly in fast market conditions, resulting in execution price that we actually have to pay, that can be different from the quotes displayed at order entry. So 224.90 is not a guaranteed fill price. With stop orders, there's no guarantee that the execution price, the price that we receive if our stop is triggered, will be equal to or near the activation price. In this case, that would be our 218 stop. We're not guaranteed to sell at exactly 218 if it goes down and hits our stop. Let's send that order off. There's not a commission on this trade, but there can be on some types of trades. Look at that. We got it exactly 225. So that makes the math easy. If we buy at 225, when we sell at 247, that would be a $22 potential profit to the upside. If we bought at 225 and we get stopped out at 218, that's about a $7 loss potential-ish, depending on if we're triggered, where that trade ultimately fills. Chris B, you like that indicator? There's so much more I could have talked about. It is a truly in-depth indicator, but I knew we couldn't fit it all within 45 minutes and deliver a really meaningful educational experience. But I hope this was an interesting discussion at the very least. I want to thank the gentleman who requested the discussion of Woody's CCI here. I think you understand, by the way, why is it called Woody's? Because Ken Woods, I guess that's his nickname. Anyway, we talked about what's going on with the markets. We discussed the construction of the Woody's CCI, and we discussed a few potential trade signals that might be generated from the Woody's CCI. If this is a new indicator to you, if you feel like you need to go back and rewatch this webcast, I can't fault you. There's a lot that goes into the construction of this indicator. So you can just go back and watch the recording of this webcast. But also, if you're interested in it, apply it in paper money. Put it through its paces, see if it works for you. It's not a sales pitch for this indicator. We're just covering it for educational purposes. But that's just a good, healthy habit anytime we're introduced to a new technique, a new trade style, a new trade security, whatever. Trade it on paper when there's no real skin in the game, and then decide whether we're going ahead with it or not for real trading. But in any case, thanks for giving me your time today. Barb, thanks for helping out in the chats there. Everybody, if you haven't done so yet, make sure that you subscribe to our Trader Talks channel. You can go down and click on the subscribe button right now. It only takes a second. It doesn't cost anything, but it subscribes you to our channel. And our channel is where we host all of these previous webcasts, like this discussion that we had of just the traditional commodity channel index. So you can find those in our playlists. You can do a search for them. You can also, of course, join our live streams right here. Another thing that I would suggest is that everybody follow Barb and me on X. You can find Barb there at Barb Armstrong CS. You can find me on X at Cameron May CS. But that's the best place to connect with your favorite presenters in between the live streams. And then finally, thank you to everybody who's already clicked the like button out there on YouTube. I can see 175 people still watching the live stream. 59 have already clicked the thumbs up. That's really appreciated. Thank you guys for doing that. Feels like the pat on the back to your presenter. But it also gives my webcast a boost in the YouTube algorithm, so it helps more people find this discussion of Woody's CCI. Helps more people learn. So that's definitely appreciated. And that takes a second, doesn't cost anything. All right, everybody, I will see you next Monday. I'm going to be, well, this is my last webcast of the week. I do have regularly scheduled webcasts every day of the week, Monday, Tuesday, Wednesday, Thursday, Friday. So if I see you before next Friday in another webcast, that'd be fabulous. I'll also look for you on X between now and then, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.